Okay, guys, welcome again to my channel. This is Emmanuel Dogu here on this MRS Trade YouTube channel. So today we're going to be looking at Euro USD daily market analysis. Okay, now this is daily market analysis. It can also serve as the analysis for the week because we are going to start with the H4 time frame. Okay, now whenever you want to pick a trade, the first you want to do is to ascertain your directional bias, right? I mean the direction that the market is most likely going to be headed to, right? So, and to do that, you need to understand the structural analysis of the market. So, and I'm always doing that on the H4 time frame. Of course, doing that on the H4 time frame enables you to see what the big money is taking the markets to, right? I mean, the direction of the big money, I mean, the trend, right? So, from what we are seeing on this screen, you can see that this price is just going up, right? Just imagine if you were able to catch it from around this area that the price is going up, right? Just catch it around this area. So, that means from this very date, that's the 27th of March, up till this period, your directional bias would be to take the price to the upside. I mean, to buy Euro US. So let's make it very short so that we don't stay long on this one. So how do you know your directional bias, right? On the H4 time frame, you want to draw out your structural high and structural low, right? So from here, the market was able to put up this high, right? Then of course it gave this low. So it gave this low. So the next time it has to continue the upward trend, it has to take out this high, right? And the low that is responsible for taking out this high becomes our strong low. Now, from this low, pumps up, right? If you notice, it not really take out this high. So, in other words, it gave us two equal lows, right? Two equal lows. So, why does the market always like putting up two equal lows? It's so that it can be attracted to it the next time, right? Now it can be attracted to it the next time. That means most traders on the market will start placing sell because they have seen two equal highs, right? And two equal highs can be termed to be a strong resistance, right? But don't forget the direction of the market is stronger than any resistance or support because that is the flow of liquidity on the market, right? So if you notice from here, it pushes down again, pushes down again to give us a low, then of course, just like I said, this area is a target. So the next time it pushes up, it took out this high, right? So if you look at it carefully, you will notice that it is this low, right, that is responsible for taking out this high, right? Not this low. So this low becomes our new strong low. By strong low, I mean a verified support, something like this, right? So it means we are riding up, right? So and whenever we break a structural high, that's called break of structure, right? Now there will always be a retracement to the downside, so something like this. The next time it pushes up again, you can see it takes out this high, so that means this becomes our new low, right? This becomes our new low. So after this one, this becomes the new low. Now the purpose or one of the reasons for identify these lows, right? These strong lows and the strong structural high is so that you can see where you can set as your stop loss and take profit. So why buying, right? For swing traders, those that want to stay long on the market, why buying? Your stop loss will have to be below here because it will be very difficult for the price to trade at towards this level or below this level. So it was able to break this structural high again. I know whenever it breaks the structural high, it will always do another retracement. So it retraces again to the low side. So this is the retracement we saw. So from this retracement, we're expecting another movement or impulse that will take out this high. Okay, let me do this. This is actually the real high here. So we're expecting another impulse upward that will be responsible for taking out this high, right? So from this low, the market pumps up. If you watch carefully, now you can see all of these internal dribblings up and down, up and down. Your daily for the intraday traders, right? Traders that usually use 15 minutes, 30 minutes, or even 5 minutes to enter their trade and look forward to take their profit in a day, right? So you have to, your bias has to be a buy, right? Because the H4 time frame is still buy. That means on a lower time frame, you look for a support and then do a buy trade. You look for a support and do a buy trade. So, but you have to establish your directional bias first to be that the market is still pushing to the upside. Now one of the benefit is, what if you are on a trade, even if it's a buy trade, and that trade is still is running on negative? Now you have enough hope, right, to still leave the trade, right? And expecting that the negative will turn to profit. Why? Or the negative reduce. Why? Is because the higher time frame or H4 time frame is still on an upward trend, right? So that's one of the advantage of getting your bias. So from here is all of this up and down dribblings, up and down dribbling, as you can see. So it was not able to take out this low. Then from here, it gave us a high, right? Now, but if you notice carefully, you will see that this high is not higher than this high, right? It's not higher than this high. So this high still remain in force, right? So it pushes down again, pushes down again. So what if you have a buy trade somewhere around here, right? So all of this movement down, should you close your trade? Now, if you have if you're trading with good equity, right, good capital, it means you will be looking at this low, right? So you will not close the trade. So then from here, it pushes up again. You notice this new high, right? So let's look at it now. This high this new high is able to go higher than this high. Now, actually, it is this low that is responsible for taking out this high by putting up this new high, not this low. So therefore, this becomes our new registered support there, right? So this becomes our new register support. So once we have a new register support, right, the price has to respect, right, this support area, because this support area or below the support area is termed as our protected region, right? Or if you like, protected liquidity. So because we are riding the upward trend, so the price may not easily come below this level. So that's why your directional bias has to be a buy, because the price will find it difficult to come below this level, right? So then remember, we have taking out this high, right? And of course, taking out this high is called break of structure. So we have broken structure again to the upside from what you can see here. We have broken structure again to the upside, right? So since we have broken structure again to the upside, then after that the market pumps down lower, right? So you can see how much it went down. Now, if you go down 15 minutes time frame or even 5 minutes time frame, from year to year, it can be seen as a trend, right? Now that's one challenge with trading with a lower time frame. So they will just lower time frame traders, 5 minutes, even 1 minute, or even 15 minutes, they will just be going with a sell, right? Forgetting that the H4 time or the higher time frame is still on an upward trend. So now there is nothing wrong trading with the lower time frame. It's fine. I do trade with, in fact, my entry positions is usually with 15 minutes time frame. I do trade with 15 minutes time frame, very fine. But I normally keep an eye on the higher time frame, right? So because once I'm selling going down, I normally keep an eye that this area is getting close to the protected liquidity. That means to be difficult for the price to trade lower than this level. As you can see, it got to this point, then from here it jack up again and start going up to confirm that the trend is actually an upward trend, right? So if you watch carefully, from here it gave us a new high. But let me ask you, look at this carefully. You agree with me that this high is not higher than this high, right? Because this high is supposed to, okay, let's use this crosshair to measure it. So you can see this line I'm dropping here. You can see carefully that this high did not go higher than this high, right? And it's supposed to go higher than this high to take it out to form the break of structure. So actually what this market is trying to do, like what it did at this other, like what it did at this other point. Excuse me, let me draw this again so that so what this market is trying to do, okay, fine. So what this market is trying to do is exactly what it did here. It gave us two equal highs, right? Now that means it is inviting or inducing sellers, right? So sellers will start coming in, although they will sell and make profit, right? Now that's for intraday. You should not stay long while making profit, but not to forget that the higher time frame, H4 time frame, is on an upward trend. So that means my prediction for Euro USD for this daily market analysis and weekly market analysis is that Euro USD will pump to the low side. I mean, it will trade lower, right? So it has created for us a relatively equal highs, right? And of course, you know that's a trap on the market. So my forecast is that it will pump lower or it will trade lower, right? So the question will not be how much low will it trade, right? How much low will it trade? So we can know that with our Fibonacci, right? So we can use Fibonacci. So we can do one from this low because this low still remains our strong low. So we can do one from here to this high, right? Even to this high, right? So you can see, so I normally look at for between 50 to 60%. So around this region, my prediction that it should be able to trade around this region. Now, because this low is also an important low because it is this low that has given us this relatively equal low. So I'll also draw another Fibonacci. So that becomes a confluence of two Fib levels, right? So a confluence of two Fib. So you can see this other level is up here. So let me draw here again around this level. So this is another level again. So this shaded area, let me just change the color real quick. So this shaded area, right, is the area where the market will most likely retrace to, right? So the area where the market will most likely retrace to. Then afterwards, now as long as this low here is still being protected, right? It has not taken out this low. Remember, we're still working the upward trend or afterwards, if it not take out this low, then of course we expect that it will come this low, then from here it will pump higher. So that means right now or for today or for the course of maybe today, tomorrow, you can be looking at for sell opportunities, right? Sell opportunities. Of course, at this top there was a sell opportunity here. That's why it moved down because this is relatively equal high. So if you look for a shift in character at this top, you can do a sell and of course take it down. So once this price move lower again and enter this my shaded portion, so you can see it's from 1.09820 to 1.10130. So around this area you can look out for a buy trade, right? And of course, your take profit should not exceed this high, and of course, your stop loss can be at this low or even at this other low. And of course, you're sure of making profit on this trade, right? So then, but from here, where the prediction is that it's going to trade and give us another break of structure and keep pumping to the upside. But keep an eye on this low and of course this low. So once these two lows are taken out, that means we have experienced a shift, right, on the H4 time frame. Okay, now so once you have a point of interest, point of interest simply means I'm interested in this area. So once this price comes down to this area, they'll look out for uh, a buy trade, right? Now in doing that, I will not do that on H4 time frame. I will move downward to the 15 minutes time frame and look out for my buy. Okay, now this is my analysis for Euro USD for today, right? Being the 4th of May 2023. Check out more videos on this YouTube channel, right? Thank you very much. See you on the next one. Bye for now.